Accounting Standard 16. This standard is effective since 1st April 2000. It deals with the accounting for the borrowing cost and not with the actual cost of owner's equity of preference capital. It states that the income on the temporary investment of the borrowed funds be deducted from the borrowing costs. The borrowing cost can be interest and commitment charges, amortization for discounts of premium, finance charges in respect of assets acquired under finance leases. Accounting Standard 17. This standard is effective since 1st April 2001. It deals with the segment reporting of information about the different types of products and services of an enterprise and its operations in different geographical areas for assessing the risk and returns of a diversified or multi-location enterprise that is not determinable from the aggregated data. Accounting Standard 18. This standard is mandatory since 1st April 2001. It deals with the reporting of related party relationships and transactions between a reporting enterprise and its related parties. If there are transactions, the disclosures will include name of related party, nature of relationship, description of nature or transactions, volume of transactions, amounts outstanding at the balance sheet date, amounts provided, written off, written back during year. Accounting Standard 19. This standard is effective since 1st April 2001. It deals with the disclosure of financial statements pertaining to finance lease and operating leases. It does not apply to lease agreement for natural resources, licensing agreements for films, patents and copyrights, lease agreement to use land. Accounting Standard 20. This standard is effective since 1st April 2001. This standard aims at prescribing principles for the determination and presentation of earnings per share, which improves the comparison of performance among different enterprises. This is applicable to enterprises whose equity or potential equity shares are listed on a recognized stock exchange in India. An enterprise should present a basic and diluted earnings per share on the face of the statement of profit and loss for each class. Accounting Standard 21. This standard is effective since 1st April 2001. It deals with the presentation of consolidated financial statements of parent entity and its subsidiaries. Financial statements of the parent and its subsidiaries should be combined on a line-by-line basis by adding together like items of assets, liabilities, incomes and expenses. Accounting Standard 22. This standard is effective since 1st April 2001, 1st April 2002 for companies and was amended on 1st April 2003 for all. It deals with the determination of taxes on income pertaining to an accounting period. This standard does not deal with taxes payable on the distribution of dividends. Taxes on income accrue in the same period as the revenues and expenses to which they relate. The differences arise when the taxable income is different from the accounting income due to certain revenues or expenses not considered in computation of taxable income. Accounting Standard 23. This standard is effective since 1st April 2002. It deals with the accounting for investments in associates in consolidated financial statements. The disclosures are required for proportion of ownership interest and the proportion of voting power held. The investments in associates for equity method should be classified as long-term investments.